Listen, it's about time to have the conversation. Should we be buying gold here? Guys, my name is Hamilton. I'm here with the Trading Initiative, and in this quick video, we're going to talk about whether or not it's time to buy gold, some price targets, some entries, some stops, etc. So let's just dive right into it. First off, I want you to consider the fact that gold tends to build long bases over huge amounts of time. If you see from 1980 all the way until the GFC, we were trading underneath those 1980 highs. This is an extended period of time where gold was range bound. But obviously, if you would have bought the breakout, you can see the huge increase in price in gold, and this is what I want to focus on. That's 168 to 170% pop once we got up and over previous highs. Coming in towards post GFC, we have another range being built. Once again, this is about a 10-year range that was built over 3,000 days, and here we are breaking up and over those GFC highs somewhere around 1800, 1900. What I like about this specific chart, and what you should like about this specific chart if you're a technical trader, is we love when bases get built on top of previous resistance points. This is incredibly nice trading. We have a clear area that we want to attack above that 2050-ish area. We have support down below. We have the 200-day moving average also acting as support. This is a fantastic trading opportunity, when or if gold gets above that $2,000 area, and that's what I want to focus on. So right now we're looking at the weekly. I just want you to see how the structure, the market structure of gold, it's very easy to understand where we want to buy on the weekly. Let's bring it down to the daily to get a little bit more concise here, and we can see what a beautiful range. I mean, this is just a very easy technical pattern that we can buy the breakout of. With that, unfortunately, comes a little bit of hardship above 2000, 2050. We expect some whipsaw type price action, which is why we're looking to get positioned early. All right. And that's the point of this video. I want to point out a few different things here. The RSI came down on the latest dip and completely reset. So that momentum is completely reset and shooting up towards the bull side here, right? Lots of different macro and geopolitical risks going on, factors going on. Middle East, is the dollar going to die? All of this stuff, it doesn't matter. Okay, what matters to us is that first off, we're above the 200-day moving average on high volume with good momentum, which is shown to us by RSI. And then obviously we're coming up towards that all-time high at that 2050 spot. We are very, very conscious of whether or not we want to be buying gold here. We established our first positions yesterday on the close over the 200-day moving average. So we are front running this a little bit. And the reasoning behind it is because if we wait for the 2000 or 2050 area pop somewhere up here, it's going to be everywhere in the headlines. And at that point, when a trade becomes very crowded, it tends to become a lot harder to hold in the short term. Lots of whipsaw. You'll see a breakout and then a pullback, a breakout and then a pullback. A lot of people are going to get stopped out and get frustrated. We want to try to get a head start on that. Coming, with that front run obviously is a little bit more risk. What happens if we never get up here? We're willing to take that risk because we do have a rather tight stop below the 200-day moving average. So this is a very high R to R trade for us. Like I said, we started opening up positions yesterday, and we are expecting a potential all-time high breakout. I do want to preface that we don't know when. We don't know when it's going to break out into all-time highs, but we have this idea that it will. It's going to. Timing it is going to be incredibly challenging. We love the fact that the RSI reset, momentum reset. We're shooting up on high volume. There's a lot of buying happening, shoot right up and over that 200-day moving average. And like I said, this is a very easy chart to read. Above $2,050, everybody is going to want to own this because it's at an all-time high. And to shoot back really quick and reflect on this, what an amazing setup. This is a consolidation fractal on top of a previous pivot high. I mean, this is just, it's easy. It's very, very easy to trade this once you understand market structure and how we're getting two completely different but aligned fractals that we can play the breakouts of. If you were able to buy the breakout last time, you got a nice pop up towards 2050. That was a big move. What's going to happen if we get up here? We expect the next move up. Obviously, the fibs are there for some price targets. We expect if we do break out above 2050 to attack that 2300 area and potentially beyond. There's a couple different ways to play this specific setup. I'm not going to go into them in this video, but I want you to go ahead and look at them yourself. You can play gold miners through GDX. You can play individual gold miners through names like AGI, OR, Gold, which is Barrick. A bunch of different gold miners are going to be small, mid caps, higher ADR. Or you can simply own the ETF itself, GLD, which does its best to track the underlying spot price of gold. Lots of different ways to grab this. Timing is critical. Timing is critical. Early is wrong. Understand if you're front running like we are, have a tight stop so you're out if it's not the right time to own this, but we do expect gold to eventually break out into all-time highs within, relatively short term. And I'm talking 1 or 2 quarters. We do think it's going to be up there near that 2050 spot, and it's going to suck in a lot of liquidity. Guys, my name is Hamilton. I'm here with the Trading Initiative. Super quick video. I wanted to get this out. It's a beautiful market structure. If you're playing this, let me know. If you don't think gold is going to break out, let me know. Talk shit in the comments. I like to respond to them. I'll catch you in the next video.